Hi everyone, let's go over my macro and high time frame bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with my macro bullish scenario, where we are looking at a finished wave 1 and a finished wave 2 for then continuation to the upside in a bigger wave 3. In this scenario, what is important is that this wave 2 retraced to above the 0.5 and it also ended before the 0.382 fib time. Now most commonly, a wave 2 is retracing to between the 0.5 and the 0.786, taken from the low to the all-time high. Also, most commonly, corrective structures are ending after the 382 and not before the 382, taken from the low to the all-time high as well. So the Fibonacci's are not really in favor of this being the low of a wave 2. Now, I did see scenarios where you have wave 1 to the right as well as wave 2, and now the COVID low is the low of the first impulsive structure to the upside. And if we then change the pivots of the Fibonacci pool over here as well as the pivot for the fib time, then you can now see that the low has been made on top of the 0.5 as well as on top of the 0.618, which is very nice for a wave 2. However, the big problem now is this wave over here, because this wave looks like an impulsive structure. Therefore, we're thinking about either a wave 1, a wave A, or a wave C. But because now the low is the COVID dump for the beginning of this impulse move to the upside, this then has to be part of a corrective structure, meaning a wave C. But if this is a wave C, we are looking for a 3-wave structure in A, a 3-wave structure in B, and then a wave C to the upside. But this wave B is extremely extended, going even below the rare targets for a wave B, and it is quite difficult to find a solid wave A count over here, where this then results in a wave B and a wave C to the upside. So therefore, at the moment, it's not really preferred, where therefore the probabilities of this being the low might be questionable. Now, if we think about time, which is important, I have two pink lines on the chart, and these are basically comparisons, like copies from the chart. One copy is from this low, that is the one on the left, and another copy is from this wave 1 over here, which is the one on the right. And I think it is important to compare the impulsivity of this wave 1 as well as this structure for the beginning of wave 3, because these structures over here were part of a macro wave 1 and then a 1, 2, and now we're looking for a wave 3, which usually is the biggest, strongest, highest volume wave to the upside. But if we compare the move that we have from the low of wave 2 here to where we are right now with previous structures, then you can see, and these are 1-to-1 structures, I didn't change the size whatsoever. Then you can see if I put this on the low of price, then you can see that the structure we have over here went up a lot quicker than what price is doing at the moment. Price at the moment is like, yes, it is moving to the upside, but it is doing so very slowly indeed compared to this structure, which is this one over here. And the one on the right is taken, as mentioned, from this wave 1. And if we then put this on the low, then now you can see it was quite okay. Price actually moved to the upside faster, but then now it is ranging for a long time and it doesn't have the continuation that we had when price was moving to the upside over here. So also from a time perspective, it's not really going up quick enough compared to these structures over here, which were part of a wave 1, not even a wave 3. And as mentioned, wave 3, we want to see this being the most impulsive, strongest wave to the upside. Now, if we look at the macro bearish scenario, we are thinking about a 3-wave structure to the downside, so further lows to come, with inside wave B a 3-wave structure currently working on then an A, B, C to the upside, which is a zigzag, a 535. Important resistance for price is between 39k to 50k, because the golden pocket here, taken from the high to the low, has confluence with the point of control, this volume profile over here. So that is important resistance at about 39k, and the 786 is in confluence with the value area high. So that is also incredible important resistance there. If we look at the targets, if this is the low of B, and we look at the targets for a wave C, pulled from the low to the high of A to the low of B, then you can see that the most common target area for a wave C between the 1 and the 1.236 is in confluence with that 786, and that is very important. Now, of course, price could drop, and then we're just going to move that wave B to the right side. That then also would mean that the most common target area for a wave C is moving to the downside, but by all means, it will always have confluence with this very important resistance area. If we then look towards the downside, we're looking for another impulsive structure to the downside for a wave C, where we have a golden pocket taken from the low to the all-time high in confluence with a multi-year volume profile value area high. As you can see, very, very important support, which is between around 11K and 8K, because the most common target area for a wave C, if the high of wave B will be made around the 786, is the 1 to the 1.236, which is then in perfect confluence with the golden pocket and the multi-year value area high. So this is very important support for Bitcoin for then eventually a continuation to the upside. If we go to the daily time frame and we zoom in, then over here, this is the most bullish scenario. This is the scenario where we have a finished wave 1 or A, followed by a finished wave 2 or B, and then we're looking for continuation to the upside in either a wave C or a wave 3. Now, if we look for a wave C, we're looking for a slower move to the upside where the 1-to-1 over here is important. This is a fib time taken from the low to the high of A and then put it on the low that we have over here, which then is the low of wave B. Usually a wave C takes around the same time or a little bit longer as wave A, and this 1-to-1 is now sitting at the 6th of November this year. So if price is moving to the upside and it hits the most common target area for this wave C, which is between 40K and 44K around November, probabilities are on the side for this to be a wave C, because if this is a wave 3, you want to see usually a very impulsive move to the upside, right? You want to see a strong move, the strongest move, high volume impulse to the upside, and preferably not really hitting this 1-to-1 inside of this area. You want to see something like this, right? It has to cross this area, preferably before November, but of course it's still quite a way to go. That also means that the low, of course, has been in, which is put on top of the 0.382, pulled from the low to the high of A. And the 0.382, as mentioned before in the macro, is a rare target for a wave 2, but a common target for a wave B. So the fact that price is bouncing on the 382, and if we are looking for a continuation to the upside, the probabilities are a bit higher. We're looking for a wave C instead of a wave 3, because for a wave 2 preferably you see price retracing to the 0.5. And if we think about a retracement, then this is the more bearish scenario, which eventually leads to upside. But in this scenario you would expect this low to be taken and a wave 2 or a wave B to be made in between the 0.5 and the golden pocket, which is between 23.2k and 20.8k. That then means that we are looking for a 3-wave corrective structure to the downside, and then over here a wave A, wave B, and then looking for a C to the downside. As this wave B took the highs of the beginning over here, we're looking for a flat, so an A, B, C flat to the downside, where now you're looking for an impulsive move to the downside. Of course, in my daily updates I go over this bit of price action, so the probabilities are always mentioned in those videos for price potentially moving down, or this being the start of something for continuation to the upside. And then that also leads me to the probabilities, where if we zoom out again to the macro time frame, the probabilities on the macro are actually the same. They're like 50-50 at the moment. One could argue just because if we look at the bullish scenario, you want to see continuation to the upside. And if we look at the bearish scenario, then you are also looking still for price to move towards the upside, towards that 40 to 50k area, which is also important. Again, B could be made lower as shown on the daily time frame, but you would be looking for this area over here. And then depending on how price is approaching this area and how it reacts, we can give probabilities to the different scenarios. But I did mention that currently the low over here with the 0.5, the 0.382, and time-wise compared to previous structures, the bullish scenario, doubtful, right? I don't really want to give a percentage probability to both scenarios, because in the end we are looking for upside, and therefore I think it's important to just observe the reaction and not really talk about probabilities just yet. And if we go to the daily time frame and we zoom in, then on the daily, probabilities as it stands while making this video are higher for the low of wave 2 or B to be in, and this to be a continuation to the upside structure. Of course, price can dip a little bit lower. The invalidation is all the way down here, and we have some incredible support around 27 and 26k. So of course price could move to the downside before moving up, but at the moment the probabilities from an Elliott Wave point of view are higher for this scenario. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.